On Friday, we just saw the fourth largest daily decline of 2025 so far. A lot of people are blaming that on the new tariff concerns between America and China. America threatening 100% broad tariff on China, and that came as a response to China maybe stopping the trading of some rare earth metals, which China produces 90% of those in the entire world. Pretty much any industrial process uses these rare earth metals, and therefore America is hitting back hard with these tariff threats. Because of that drama and the big sell-off on Friday, I think it's worth us looking through these issues to see, well, what happens if we reignite this trade war, or if China no longer ships those rare earth metals to America? How bad would that be for the American economy and the American stock market? The first way we're going to look at this is just in a pure financial manipulation aspect. Wall Street often uses these big stories as opportunities to scare retail investors like you and me, get us to sell our investments, sell them at today's levels. Maybe we see a 5 to 10% decline in the stock market, and at the bottom, Wall Street comes in, buys up those companies at rock bottom prices. And we can see this play out in the US smart money versus dumb money confidence. Really, it's just a way of saying, okay, retail investors, people with smaller accounts, how much have they bought into the stock market lately? And then you have institutional investors, maybe managing more than billions of dollars at a time. How much are they buying into stocks? And at the moment, dumb money is sitting at a 0.72 out of 1, which is an extremely aggressive place to be, kind of seeing all-time high aggressiveness at buying the stock market. The thing is, this was last updated in August, and throughout September, things just got even more greedy. So we may have even seen record levels of greed from retail investors like you and me, whereas smart money, institutional buyers, Wall Street, they only had a 0.39, which is telling us they've been stepping back, maybe even selling off their positions, waiting for a better price to buy in to their favorite companies. And usually it's this position right now, retail being overly aggressive, big money being a bit smarter, a bit cautious. This is where we usually see around a 5 to 10% pullback in the stock market, even without zero concerns with the economy. This is just total trading in the short term. I do agree with this argument that yes, Wall Street loves to cause a bit of drama, pump out all this negative news about these tariffs to try and scare us into selling. And yeah, they might be happy with a 5% decline, buy up some companies like Meta and Amazon that have fallen 10, 15% from all-time highs. But the thing that I see here is that Wall Street is getting too overconfident in the fact that we could see a much bigger decline, a big crash in the next couple months that no one is really ready for. We could see a much bigger decline, yes, because of the tariffs, but some other big issues we'll talk about at the end of the video. But more on that later. So looking at this chart here, having a look at tariffs, this is the average tariff on all Chinese products by America, that's in blue, and then in the red pink we have China and what they've done to American products on average. But America has been quite sneaky here. They've been adding on slowly extra tariffs just on some different segments of the market, some industries, and we've slowly climbed from an average tariff of around 50%. Well, that's now gone up to around 57.6%, and China is not happy with that. However, we do have some positivity about maybe these tariff concerns blowing over pretty much once again, and that is Trump and Xi Jinping were meant to meet in South Korea in late October, and the fact is we have that 100% new tariff, and then we have the fact that the 100% tariff US on China is coming in on November 1. So Trump is giving Xi Jinping an option to maybe get out of these tariffs if he plays ball with these rare earth metals, a very common Trump tactic. But the little secret here, and what's happened all this year, is yes, Trump does often walk back some of his biggest, threats, but overall he often walks back only 90%. We could see another couple fresh tariffs laid on China, even if it's not 100%. In my eyes, I would see that as the positive case of what could happen here, and the stock market will just go back to all-time highs once again, get over this small drop. However, if we do see the tariff rate on China go up to 100%, if we see China not ship rare earth metals to America, this could have quite a drastic impact to the American American economy. And obviously, we could have a huge impact to the manufacturing capacity of America. And that's kind of one of the reasons Trump put tariffs on in the first place. But I've got another way of looking at this, just in terms of the extent of the tariffs that have already been put in place. Now, I believe we're sitting at a bit of a happy medium in terms of tariffs. If we go through some graphs here, we see the prices paid to foreign sellers based on the different category of imports into America. However, most goods have actually gone down in price over time, and that includes the tariff. The only category that has seen a price increase, maybe because of tariffs or just the global change in prices, is capital goods. And capital goods is just another way of saying those things that are used in the making of other goods. So think of machinery, parts, all that stuff, factory components. They've gone up in price around 1%, but for the most part, things are looking okay. And that begs the question of who exactly is paying these tariffs. It's just a fact that America has slapped on 20, 30, 40% tariffs on everyone. So where is that money going? So we do see for things like automotive parts, that tariff is about 18%. Consumer goods, 13% average tariff for the whole of the world, but we did not see that in consumer prices. So what that really tells us is the consumer is only paying, 10, 20% of the tariff maybe, but the far majority of that tariff is getting paid by American businesses, but also maybe from businesses in China, Europe, whatever. They're paying some of that tariff themselves in a sense. So far, we haven't really seen any positives for America, the people, the government just yet. The big positive is really going to be in terms of helping pay down the government debt or just not letting it grow as fast. In 2025 so far, we've already seen the total revenue the US government takes in from tariffs double to 2.7%. But if Trump continues policies exactly as they're currently worded, then we could see the tariff share of total revenue jump up once again, quadruple to about 5% of the total. I do think we're in a bit of a happy medium. Tariffs are not so extensive that they've destroyed the American economy. However, if we do see the Chinese tariff go to 100%, so that's roughly tripling where we are today, then that could be pushing the American economy over the edge, and we could start to see, again, massive layoffs, profit margins of businesses decline, just trade activity overall go down, and you start to set up a situation of inflation skyrocketing, unemployment going up as well, and you see a stagflationary recession similar to the 1970s and early 80s. However, that's not the only piece of news that's going on at the moment to do with the government and Trump and the economy. We also have the Democrats and Republicans fail to come up with a deal to stop and avoid government shutdown. So going to the second story, what is a government shutdown? Basically, you have the different branches of the government, the Senate and also the House. They need to come together to agree on a budget for the foreseeable future. However, there's been a push over the last decade, and Trump is one of the big players here, where they hold the federal government ransom. If the government runs out of cash flow funds in the short term, still haven't made a budget, then the federal government needs to go through what's called a shutdown, and the federal government has to stop spending on non-essential items. You have around 750,000 non-essential employees who get their paycheck paused, but Trump is threatening to just not pay those people at all. I'm not sure the legal standing he has on that. You have essential workers who do continue to work, but some people like air traffic controllers, maybe because their paychecks are so large, they actually just get a pause in their pay, but they have to continue working. And the longer the shutdown happens, we're going to see a deterioration to the American economy. There's too many workers, 750,000 non-essentials, but probably around 1.5 million contractors who work for the government. They're not getting paid. So that's around 2 million people maybe not spending money in the economy. And analysts have come out and said every 2 weeks we see this government shutdown continue, we're going to shave off GDP growth around 0.1 to 0.2%. But I do see this government shutdown continuing for a while longer. At the end of the day, the Republicans and the Democrats are disagreeing, where the Democrats want to extend tax credits, which makes health insurance cheaper for millions of Americans. We also see some arguments about Trump cutting Medicaid, which is funding for people who are elderly, disabled, or are low income, making healthcare cheaper. And we also have some cuts to government health agencies. So at the end of the day, Democrats just see this as a political win. The longer they hold up the government, then Trump is really the one being blamed for all of this. He's got a big fat target on his face. Everyone loves to throw problems his way. So the Democrats probably aren't going to step down from this because their odds of winning in the midterms next year slowly go up the longer the shutdown continues. And Trump himself also probably sees this as a win because he's seeing this as an excuse to not pay federal workers or even fire federal workers over this period, which ticks off one of Trump's major views, and that is to try and shrink the federal government and cut the government deficit. If you just have no money to spend, then that's ticking one of his boxes automatically. This is a win for him as well. If this shutdown goes on for a month, maybe we have a 2-week really sharp decline in the stock market, and then we pretty much just see the stock market bounce back up to all-time highs once again. We get over that news, it's very short-term in nature, and fundamentally it's just a buying opportunity as long as it doesn't last too long. And that's why I'm going to continue my message here on the channel, which is to buy growth companies for a good price and to also make the opportunity to maybe leverage some of your bets using options trades. So having a look here, I bought some put options and I've just sold them in the recent sell-off, made a quick little 10% gain there. But overall, I've got some big bets on Amazon. Meta is my favorite at the moment. Maybe if we have a sell-off, chuck in a few extra thousand to buy up that dip, and we should be heading to greener pastures, happy days towards the end of this year, going into 2026.